Yes, and I think that's a great point, and I don't think it's uniform across all the subsectors, sub-industries of technology. I think there are some very specialized industries in the U.S. that will continue to benefit, including semiconductors equipment companies, which we continue to see benefit in the current period. But I do think that tensions will, if anything, force China to get more into the higher value areas of the supply chain, which we're seeing already, and we're seeing their desire to do. So longer term, I think trade tensions do impact the U.S. or accelerate their place in the value chain, or they accelerate the position change in their place in the value chain, or at least more competition in that space. And I think that is a longer term concern. It's very difficult to do that in the shorter term, though. So it's not a problem for this year, but I think the U.S. will suffer longer term if rhetoric doesn't continue to increase and tensions do rise or stay persistent.
Daniel, can you just elaborate here on, because I understand that you still like U.S. equities as part of your investment strategy, yet you've outlined a number of risks there that you might say are worrying, and just looking at the levels where we are now with U.S. markets, what gives you ongoing confidence here?
Yeah, so I think it's an important point of clarity that I think that we can either think about this in an absolute story, or we can think about it in a relative story. And I think U.S. equities actually benefit in both, perversely, but they do. And I think that if we get an improvement in risk appetite and improvement in containment of the pandemic and tensions do ease, that's great for U.S. equities continuing, and especially to their exposure in the technology space. If everything goes the other way, then I think investors continue to look for the tech exposure in a relative place, which we've seen on the way down during the pandemic, on the way back up in the pandemic. The tech has outperformed, and that exposure and the base within U.S. equities, especially that interest in U.S. dollar, U.S. assets as U.S. dollar has become this de facto risk-off asset, I think benefits the U.S. in a relative sense, even though it might be absolute down. So that's why I continue to like the U.S. story in terms of return on equity, and we understand why the price to book value is higher, because people will pay up for higher quality companies and this exposure to large exposure to tech that is available in the U.S. equity markets. And that also applies to North Asia and into China, into Taiwan, into Korea.